Most XRP holders have been waiting for the day that Ripple goes public. And Brad can say what he wants, but we all know it's going to happen when the time is right. But a new rule just came out, quietly proposed by one of the most powerful index providers in the world. And it could block Ripple, among other crypto companies, from entering global indexes. And the moment they IPO, well, they'd be blocked. Not because of regulations, the president, Congress, the SEC, no, but because of what Ripple holds on its balance sheet, XRP. And here's the scary part, it's not just Ripple, it can reshape how every crypto exposed company is treated by the financial system. And there's a reason for it. It's not investor protection. The minute you hear that, you know something's afoot. Let's get into it. I just put out this article today on X. It's called Dark Truth. The MSCI rule isn't about safety, it's about power. We see MSCI, the world's second largest index provider, released a proposition here that companies holding more than 50% of their assets in crypto might no longer qualify as operating companies and would be ejected from their indexes. And in other words, digital asset heavy companies, DATs is what really is all the rage right now, they'd be removed. And it might not just be MSCI. You can see the S&P, all sorts of indexes follow suit. What would this do? What would be the purpose of this? They're not supposed to make those decisions, what risks we take. I agree. A lot of digital asset treasuries are very risky. You got to give people fair disclosures. I don't think most people that invest in strategy understand the risk that's actually on the table there. That's a problem. But you fill that gap with disclosure so the investor knows what they're getting into, not by banning crypto companies. And we look at it, it's not just strategy. It's not BitMine. It's not the XRP debt that's coming out, the $1 billion XRP debt. The biggest digital asset treasury in the world, it's not even close. It's Ripple. Ripple's worth $40 billion, but they hold $90 billion worth of XRP. And that's a problem that will have to gap up here at some point in time. People will have to recognize that value. But they have over 100% of their assets in XRP right now, technically by their company valuation, and this rule will block them. And, that's a significant, the second biggest index there is. And if others follow suit, that means Ripple couldn't be on the S&P 500. They couldn't be on a lot of these different indexes. That's a problem, and it's all because your BlackRocks, your JP Morgans, all of these companies, your VanEck, they want to control that flow. They want every dollar flowing in to their ETFs. They're trying to control that part of crypto. If you're going to invest in Bitcoin, XRP, Ethereum, Fidelity wants that flow coming into their ETF. They don't want you investing in a digital asset treasury, whether it's Ripple, whether it's Strategy, whether it's BitMine. They want that money coming into their funds. That's the purpose of this. They are not trying to protect you. The minute you hear that, you got to push back. You got to say, what's really going on? Because they don't care. Every one of these institutions sell you awful financial products that are guaranteed to lose you money, but they do so without blinking an eye. And they have no worry about protecting investors. It's nonsense. Now, again, I think digital asset treasuries in general, they're using leverage on a highly volatile asset. And so we need better disclosures. I've been yelling at the rooftops about this. But you're going to have other companies like Ripple, who is technically a digital asset treasury, but they're not using leverage. They have real businesses that are going to cash flow into that company, and it's going to be a game changer. And this role would capture them too. And they know it. And that might be part of the reason why they're proposing this. And people have to flip out here and really see what the future is, and that it's really about control of this asset class more than anything else. There's a lot of areas we can improve, but banning these types of crypto companies and really excluding a whole part of the economy is a big problem that we got to get into. Now, David Schwartz, he originally put something really interesting. He says Ripple may not need to sell as much XRP, basically saying that the company's new revenue streams could finally reduce the pressure to sell XRP on the open market. A lot of their funding has come from selling XRP when they're buying these billion-dollar companies, when they're paying staff. The cash flow is selling very valuable XRP. But again, in the future, a lot of their value is going to be derived by the XRP they hold on their balance sheet. And to sell XRP today is to lose its value in the future. If they don't have to, they ain't going to sell XRP. And why would they? It's a valuable asset that's increasing quickly. They're going to want to hold on to it. And if they are making money at their stable coins and their custody and all the other things, they may not need to. David's whole point of this is don't fear things like RLUSD and all these different businesses they're getting into. It could actually help Ripple hold on to more XRP, which would mean less XRP hitting the open market, which would be good for the whole ecosystem. Thought that was an interesting way to look at things. Now we have this interview, Paul Barron, and he was interviewing the CEO of Tecrium. And what he said, this is interesting, listen to this. Ripple is building a JP Morgan rival, and XRP is at the heart of it. So you hear all the time, oh, they're moving away from XRP. It's nonsense. XRP is the engine that drives all of this. We see in this conversation with Paul Barron, CEO dropped one of the most aggressive takes on Ripple to date. Ripple is literally building a JP Morgan challenger. XRP is a strategic reserve, not something Ripple plans to sell. I've been really harping on this, that they're going to cut off the spigot eventually, and they're not going to sell anymore. And they're going to hold on to as much as they can, and they probably will buy more at some point. So that's a big statement there. And the company is becoming a blockchain native global bank in waiting. And again, that may be partially why we're seeing moves like this from big institutions, because they see the writing on the wall. What is happening with Ripple, how they're going to do a takeover. And he goes on to say, if Ripple secures a banking license, it goes head-to-head with the largest financial institutions on Earth. And that's what you have to understand. That's what's at stake here. Now, Lynn Alden, she just shut down the capitulation is coming crowd. Now, this is an interesting perspective. She says this cycle is not driven by happenings. It's about macro and actual asset interests. Translation, we're not going to see a euphoric top this time around. There's not going to be a forced mega capitulation. And this year, this cycle may last much longer than we would otherwise expect. Last thing here was really interesting. Panos is saying the majority of XRP community is against programmability. 62% voting against programmability. Let me know what you think down below. Are you for the right kind of programmability on this blockchain, or do you think there should be none? As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.